All right, so welcome back to the part 2 of this video on testing the ICT trading strategy. But this time around, we're talking about the power of three. Yeah, continuation of power of three, and I'm giving more examples on the ICT power of three. I've seen a lot of you are actually anxious about understanding the ICT trading strategy. I'm going to explain it all in this video because you all know that this forex market and the market moves up, down, it ranges. But the question is, how do you get your pips directly? All right, so that's what we're going to be understanding in this video successfully. If you're into this community, don't forget to subscribe and follow me down into this video. Let's do this. So when you're talking about the markets, there's usually an uptrend movement and a downtrend movement. So basically, for those of us that are working with trend going up, you can work with that successfully. But this time around, we're not dealing with uptrend and downtrends. We're dealing with three basic positions in the market that some people don't see, but we as ICT traders, we spot them because we are smart traders. Basically, in the markets, like I mentioned earlier, if you haven't watched, they have the accumulation stage where the market accumulates. We have the manipulation stage. If the market is manipulating to the downside, it deceives traders and manipulates to the downside. And then we have the distribution stage where the market sweeps liquidity and moves all the way up. So this is what we mean by the accumulation, manipulation, and distribution in the market. So basically, I'm highlighting this up to show you what I mean better. Okay, so like I mentioned, we have the three stages: the accumulation, the manipulation, and the distribution, as clearly shown on the screen. So don't spend time talking about this because we discussed this in our last video. Let's go straight to the chart. So I've given you some examples and we know how to feature them here. So basically, I'm currently on GPUSD chart, 30 minutes time frame, and I'm going to be showing you how to use this ICT trading strategy, checking out the other blocks with the fair value gaps and how to work with the accumulation, manipulation, distribution to make good profits. So I'm going to be hiding this right now, the replay tool, so you don't just observe it quickly. You learn during the process and know what happened. So basically from here, we can clearly see there's an accumulation here. If I move down to 15 minutes time frame, you see it clearly. Let's focus on this time frame so I can just show you what's going on before going to second example. So this is the accumulation stage, which means the market is just keep on getting more orders going up and down with nobody deciding where the market is going to. Now, after this accumulation happened, the next thing happened in the market, and that is where the manipulation came into place. All right, the market didn't pick any side. Manipulation can be either to the downside or to the upside. That's one thing to take note of. It's not necessarily the downside. It can be to the downside or to the upside. I'll be giving several examples in this video. So you can see the manipulation taking place over here. Let's move into the future and see if it continued. Okay, so that's the manipulation still taking place, and this manipulation error over here because it moved to the downside. Now, where will you see? Let me change this candle color, this box color, that's rectangle color, to yellow, so I can differentiate it from the other aspect here. So yeah, we're on track with this now. After seeing the manipulation stage, last you're going to work with is distribution. But distribution doesn't just occur like that. So where did distribution work from? Distribution works from a region where we had a fair value gap or where we had an order block in the market in the past. Basically, I can clearly see from here, there's a region where we have an order block in the past. I'm just going to take note of this entire region. Now, if you don't know what an order block is, an order block is an up close. And if you don't know what an order block is, an order block is an up close candle that sweeps liquidity, okay? It leads to break of structure and sweeps liquidity. As if the market was coming down, but you see this up close candle here over here, took the market all the way up and broke the structure that was forming over here. Go to 15 minutes time frame, you'll see it better, understand better. But I just want to give you the example and show you how this turns out as a trade. All right, whether we win or lose, you will see in this view. So basically, from this region, we're having an order block here. So let me change the color and show you. Okay, so now that we know there is a manipulation over here, the next aspect is distribution. So to enter for a distribution here, we come back. Okay, let's look for a buy position. This is short, this is a long position. We're actually long position over here. Remember, this is the order block, which is the up close candle that sweeps liquidity. It breaks structure and it went ahead to sweep liquidity for people willing to enter sell positions, and it took the market all the way up. So basically, we're entering from here, the 50% retracement level of the order block, and we're having a risk reward ratio of 1:2. Now, where do you usually place our stop loss? If you place this here, our stop loss is going to be beneath this particular order block region here. All right, I'll give it a breathing space. So basically, I'm going to be editing this aspect and taking our stop loss down. Okay, usually have our stop loss over here, and our take profit is 1:2. So we have a risk reward ratio of 1:2 in the market, and with this already, you can even see that our market has clearly hit our take profit from here. So let me just play it to show you. Some of us also risk 1:3. You can go for 1:3 profits, and risk to 1 to 3 profit will give you more profit. But the point here is the fact that the higher your risk to reward ratio, the lower your accuracy. So with 1 to 2, you be more accurate than a 1 to 3 risk to reward trader. Okay, so this is it. If you are working with 1 to 3, you must have gotten your stop loss almost hit here, somewhere over here. You must have got your stop loss almost hit. If not hit, let's zoom in properly, close to being hit, and then you'd have been regretting why you didn't take 1 to 2, which is forex. But just what's that was going on, all right, and then you get stop loss hit out. So we basically taking out on markets. We are working with 1 to 3 weeks reward ratio. Even when you're working with this ICT trading strategy, it's profitable, it's highly correct. But you see, this is why we usually work with 1 to 2 in the market. So yeah, I'm giving the example. It's not just to drop an example there. I want to make sure that you guys understand fully well that whenever you're trading, you don't just add emotions going in place just because you're making good profits. You should follow your strategy. Your strategy is 1 to 2, stick with it. 1 to 3 trader won't be concerned because he knows he still have 2 more trades to take before break even and continue trading profits. 1 to 3 trader would have 6 more positions, more entry position, and have gotten in for this trade over here, as you can see over here. So basically, this is market, this is forex, and you can see what can always happen. So 1 to 3 trader that lost this trade earlier would have taken this trade again, and if he gets into his 1 to 3 position, would have broken even and be in profits just like the 1 to 2 trader. Hope you understand. So let's look for another example and work with that shortly. All right, so we are on the GBP/USD 15 minutes time frame, and we're going to check on that example over here so we can understand this as the power tree properly. The reason why I'm giving a second example is so I can get it correctly. All right, so yeah, you can see the market has been going down, then it went up, and now we're in the accumulation stage over here. So if you understand what the accumulation stage is, you get what the stage is for. So I'm going to change the color of this so we can flow with the color we are used to. All right, so here's the accumulation stage because the market just kept on going up and down in this region. The next stage after accumulation stage, let me make this slow, well, then normal. Okay, next stage after this accumulation stage, we're going to be having the manipulation stage as discussed earlier. So basically, the market will have to manipulate to the downside or to the upside depending on where it wishes to go. So let's watch. Okay, so you see the market is already manipulating to the downside. Now, where the market manipulating to? Let's check from this chart. Market actually manipulated into a fair value gap position over here. You can see there's a tight fair value gap position over here, and we can observe that the market manipulated into this position. All right, you can see the doji here showing that yes, the position is still valid and the market is holding true with it. So from this position, as a trader we already know that the manipulation stage has occurred because this is manipulation over here. Okay, this manipulation over here from here to here, this manipulation over here, and then we'll be seeking for the manipulation stops somewhere around here because we must have entered our trade. But let's say we didn't sit on time and the manipulation took place in this very extent. All right, yeah. So basically, let's say the manipulation took place to that very extent. As a trader that is working with this ICT Power trade strategy, must have entered our long position somewhere around here directly. Okay, with our stop loss beneath these other lows because we're having a stop loss beneath the lows, so we can be safe. And then we are having the risk reward ratio of 1:2 as usual. So let's take this up to 1:2 and see what we can target in the market. So 1:2, and I think yeah, that's it. That's pretty much it. 1:2. So basically, we are here to make profits with the ICT Power trade strategy. You've seen it work several times, and this time around you put a 10 lot size position in this. So let's see what will happen to you and your 10 lot size position. So let's watch. So market plays up, then make this faster, and then boom, just boom, your stop loss has been crushed. Now the question right now is what really happened over here? What really happened over here, and why did this take out our stop loss? So let's analyze. So let's analyze properly. Now I'll show you what's going on. So yeah, now here's what really happened in this chart. Okay, that some of us don't get. Now, if you check out this market, let's expand it out. You can see that we've been in a downtrend. Okay, let's take it out so that a lot of us can see what's going on in the market properly. You can clearly see that we've been in a downtrend for a while, and then the downtrend is still valid up to this extent. So that's telling us that we are supposed to be looking for sell bars, not even the buy bars, which we went. It's more like we're going against the market. So with this happening already, let me show you what we are supposed to be doing over here. So you see the market here over here. Let me use this. Hope the horizontal will be good for this. Okay, so if you come here, you see that there's actually a structure over here that was broken to the downside. All right, and that structure was broken again over this position here. There are several structures that are broken here. We go to the lower time frames, but let me show you what's going on here. And that structure was broken over here to the downside. and then we're supposed to be looking for what sell positions, not that positions. So this is what market actually did. Now you can see since here the market has been going down and the market has shown us that this is sell bias. This is our real accumulation stage over here. Now why did I say this is our real accumulation stage over here? If you zoom out properly and go to lower time frame, you see that the market accumulated over here for a period of time. Okay, so here I'm going to explain better. Now, here is the real accumulation stage. This red aspect here, the accumulation stage. The market manipulated over here. Now, where the market manipulated into? Market manipulated into this other block position that we have over here. Now, I want to call this an order block on a normal day, okay? Because I know going to the lower time frame, I will be seeing more opportunities for us to work with there, because we'll be having the market having more rejections over there. So let me show you what I'm talking about here. So basically, this is the area we are taking as our order block because of this green candle. Is not necessarily an upload candle here, but it's what swept liquidity in this period. Okay, for those of them willing to continue their sell positions here, to get up liquidity and continue profits. We're not agree with me on that, but this is where we have an order block, and then there is a fair value cap position on a lower time frame around this region. Okay, if you go to the 5 minutes time frame, you can open your charts and you see it over there. Now, having observed this kind of position going on, where will we enter our position? We enter our position over here for our sell position. Okay, and our stop loss would have entered from somewhere around there. So our stop loss with a 1:2 risk reward ratio as usual. Okay, so let's work with our 1:2 risk reward ratio. This is a very huge trade, but let's see how it turns out because we are taking a lot of risk in this. Yeah, we are making our stop loss to be a high stop loss, a huge one. So our risk reward ratio is going to be a huge one too. So yeah, this is a risk reward ratio of 1:2, and then I'm going to play in this chart so we can see. So yeah, so this is what basically happened in the market. Market just kept on moving. So let's see what's going on. You can see if you had entered this position, you have gotten your take profit somewhere around there. Let me make this fast so we can see what's going on in the market. Okay, so basically those of us that entered the sell position would have entered easily for this position. Continued our sell trade. And then yeah, then pause this so I can see where we are in the market. And yeah, crushed our ratio to except what ratio. Now we had a huge stop loss here because of well we took as a stop loss. Yeah, took a stop loss at the very top, like yeah, over here. Okay, because yeah, that's what we can clearly see. We are taking stop loss based on what we can see. Okay, we are not assuming stop losses. Remember, if you are risking properly, stop loss this big won't really affect you. Okay, and because you're going to get your good profits, and this is where the profit came in 1:2 risk reward ratio. Some of us that have used a tight stop loss and have hit our 1:2 over here since, but those of us that use this huge stop loss, this is a stop loss of how many pips? So this is roughly 37 pips stop loss, and which means we got 74 pips move to the downside. All right, so this is actually a pretty nice one. And if you're on this trade, you must have taken a break even, not necessarily a break even, take profit one, and continue trading. So there's one thing to know about the ICT Power tree. It works. It actually works. Just for you to settle down, look at the market critically, know what you're trading successfully, back test, back test, back test. If you don't back test, you have issues. Yeah, so know how to back test, know how to check for break or structure, know where the entry is and everything, and then you can open it successfully. I hope you've learned a lot from this video. If you have questions, do what to leave in the comments. I know I'm here to guide you. I'll see you in the next one, champs. Do not subscribe if you haven't subscribed, and join our community for more free signals and updates. Links will be in the description. Use them and help yourself out. See you in the next one.